Okay, we are they. Hey, everybody, this is Dennis Wilborn, the Active Trend Trader. Welcome to our first session of this week. It is Tuesday, the 29th of December. We've got 2 more trading days before the end of the year, trading year. And I hope, I hope basically your profits are already in, your bag and are off the table. And now we're going to progress and see what's going on in today. I want to take a look at 3 different things. I want to take a look at one, the indexes themselves. They're showing a little bit of weakness this morning, or this today so far. And then 2, I want to jump on to just a real quick look at some of the trades that we did get into, and see if we have anything that we need to adjust or anything like that. And then finally, that's for primarily the top 5. And then I want to be taking a look at 3 of the ETFs that may be setting us up for a potential downside break, maybe after the new year. We'll just basically, again, it's as anything else. We trade the chart that's in front of you. That's what's very, very important. So let's go ahead and jump over here to let's jump over to the spiders and see what's going on with them. And I'm going to adjust this over just a taste. There we go. There we go. So as we see with spiders, I'm looking at this daily chart. We currently, if prices close where they are currently at, we will have a bearish engulfing of a break of a gap up from yesterday. We actually, if you look at this particular candlestick, I want to show you what it's telling us for today, because it's very important to have an idea what the candlesticks are in fact telling us. Let's see, I want to draw on the screen. And there we go. What it's telling us today, folks, is that prices opened up here. So in other words, what happened with today's session is we had a gap up, and then we're having a sell-off into, basically, at what point in the day did that sell-off kick in? We'll take a look at the intraday chart to see if we can get an idea of when it has been selling, been going all day long, or did after we gapped up, did we get a little bouncing and then drop? Look what's happening here. We pointed this out before. What was going on? New high, negative divergence on the daily moving daily TSI. If you don't know how to use the TSI, drop me a DM. We have some training sessions on that. It's free on our YouTube channel, Market Tech Talk. I'll show you exactly how I utilize this. This is one of the most powerful momentum indicators I have ever seen. I used to be a big stochastic trader. This is, from my perspective, 10 times better, and it also is much more predictive because of the divergences of where things may go. Market forecast, again, that's one of those indicators that I like to use with the active trend trading system. Yes, they are both momentum indicator, but dadgummit, they do an absolute phenomenal job at showing where to expect things to turn around. Right now we're showing weakness. We're getting a slight downtrend in the longer term. That's the green line. That's the intermediate line. And so we'll see if that continues on down to the downside. As I said, let's take a look at the intraday chart. Let's see, pop that up. There we go. And as you see, we gapped up. This is today's actions on a 30-minute chart. We gapped up, stopped, and fell. Now we are continuing to sell off through most of the day. Had a little bit of a rally attempt mid-morning and is dropping some more. We drop a little bit, below the 370.50 level, 370.70 level. Then we're probably going to go down and revisit the 368 all the way down to the 361. That's the potential on a weekly chart. We're not at the end of the week yet, so again, one thing to remember if you're a candlestick or you're learning how to trade candlesticks is that candlestick signals are valid after the period that they're in. So in other words, a weekly candlestick, it becomes a valid potential signal when? After the close on Friday. So remember that. So a lot of times people will go out and try to interpret the candlesticks, but the candlestick isn't closed yet. And if you look on a daily chart or even an intraday chart, a lot can happen in a half hour to a full day's trading. So that's what we've got going on with that. Let's take a look over here at the Qs, representing the Nasdaq. Okay, we had a hanging man yesterday. However, we went on ahead, gapped up, similar type motion, and now it's selling off. It has not dropped below yesterday's body. So how do I interpret that from a candlestick perspective? I interpret that from that basically, yes, it is a spinning top. Yes, it is sold off after the gap up, but not as severely as the S&P. Therefore, I interpret that the price action for the Nasdaq is stronger than the S&P. Am I in any hurry to jump on this and try to ride it to the downside? No, not yet. We do not have a reversal signal on this. I will point out that we do have this negative divergence still going on. Reached a new high, not reaching a new high on the TSI, which stands for True Strength Index. And the market forecast, just kind of meandering across. Pay attention on the, I like trading either the Nasdaq and or as represented by the Qs or their leveraged ETFs, both the inverse and the directional ETF. I like trading those more than I like trading the S&P. Doesn't mean the S&P is not a great ETF to trade. It's just that this is what I find I like better. I can basically draw a line up through these lows, and I'll just grab a whole bunch of these lows here, and we'll connect the dots here. So we've had 4 touches of this, 1, 2, 3, 4, almost 5 touches of this line. That's a strong uptrend line. And I want to basically be aware of if prices pull back to the uptrend line, what's going to happen next. And that's where I would want to lay in an alert. So I like to alert this at about the 310.66 level right now. If the prices get down to that, I want to be ready to basically do some kind, have some kind of trade in mind. If we break below the 8, then we can look at this for a potential short-term downside trend. Now, IWM on the other hand, this morning, there was no gap up. We had yesterday's candlestick, a bearish engulfing. Then today we came up into yesterday's body a little bit. That was the gap up, if you will. And now we're selling off very nicely. When I see something like this set up, and where we're getting some topping type characteristics, sometimes I will take a trade, just do a 2-wide credit spread on maybe a couple of weeks out. And if I can pick up 50% of that, if I do a 1-to-1 where it's a 1-to-1 risk reward on that, so I'm risking $1 to gain $1. If I can pick up half of that profit, so that equates to a 50% return. I like those kind of trades, and I do not hold on to my debit and or my credit spreads into the, I do not like to hold on to those towards the when they expire. And so if I'm doing 2 weeks out, that's 2 weeks from now. I like to be out of those the Wednesday before that Friday when they expire. Again, IWM sets up very nicely to the downside, and this is the first time all the way going back here since it gapped back above the 8. This is the first time that we're getting a potential close below the 8. Might be worth a nibble tomorrow, if you will, if prices come back up into the middle third of today's candle. It may be worth either a credit spread or a debit spread for a potential move where to. If we, well, let's throw a Fibonacci on that. I want to get rid of that fib. Just on this most recent move, let's just get an idea of where it might go. So just a Fibonacci retracement. We'll go here, pop up to the high here, and if it draws back to the 38.2, 38% retracement, and you look to the left, what do you see? A bunch of spinning tops. That's where it found support and resistance previously, broke out of that. So if it draws back from, again, it could go from where it's at down to about, I would say my downside target would be about 185. So that's about a $7 or $8 move down to the downside. Again, that could be either a directional put, that could be a directional credit spread, or a directional debit spread. Whatever, and if you wonder what I'm talking about, I'm talking about the credit spreads and that kind of stuff, just drop me a note. Leave a note when I'm done posting this. I encourage you, one, if you're not following us on Instagram, please follow us there. And secondly, both share and save this to refer to later. I do post it to Instagram TV, so you can catch it there. And if you're following us on our Market Tech Talk YouTube channel, I also post it there for the members who like to pick it up off of YouTube. So let's see. So IWM again. Let's see what the. Yeah, as you see here on the let me blow this up a little bit. This is the weekly chart. If, we've got 2 more days in the week, if prices close where they are right now, we would have what would be called a dark cloud cover, bearish reversal signal on the weekly charts. As you see, one of the things of interest, we are getting things to tip over. Once they tip, now I'm talking about the TSI and the market forecast, once they start to roll over and start pointing down, is once they get below, and the TSI, once they get below about the positive 42 level, that's in this zone in here between those two bars. That's when oftentimes we'll get a more significant pullback. I'm not looking for a deep pullback unless we get some really bad news in the economy, and our worldwide type of issues. We shall see what transpires. And again, as I always say, trade the stock that's in front, trade this chart that is in front of you. On a intraday basis, as you can see, we've come right down to that uptrend line. It is getting some support there. We'll see if it bounces back up. And the midsection of that candlestick is about the 196 to 197 area. So I could lay in an alert there for tomorrow. I could also lay in a target shooting. Trade to get in there. That would expire. I would be looking to stretch out into next week, into the next Friday. Friday of next week is the 8th of January. So we'll see what transpires. And that's 2021. So hey, it's always a time also, folks, to start looking at, okay, how did you trade in 2020? What worked for you? What didn't work for you? And I always like to ask myself one question. What one thing will I change in the way I traded in 2020 that will make me a better trader in 2021? And for me, I basically have already ran that down, and I want to seek better, more consistency in our small account trades. That's the one we use strategy 3, where we do option trades. My objective is to hit 5% per week, and if that compounds out through the year, it is significant. We start with $20,000 in that account and then grow it. This year we did a little bit over, close to 200% in the account. However, I did not, I feel I could have done a better job of getting closer to the 5% return on those trades per week. Now, you may sound 5% per week, Dennis, that's crazy, but these are option trades, and that is, remember, Option trades can go, it's like the two-edged sword, can go either direction. So let's go ahead and jump over, but that's one of the things I'm going to be working on next week or going into the new year. What are you going to be working on going into the new year? XOP is the Oil Exploration Group. As you can see, what is happening with it? Let me get rid of this. We'll come back to that in just a second. And double check the time. Okay, what's going on with this one is basically it fell down below the 8 and the 20 and did a rebound rally attempt, then started selling off again. We see the TSI is pointing in a down direction. The market forecast is pointing in a down direction. However, we are approaching a level of support. What do I like about this particular trade? I like it on any type of retest up in the about the $58 level, 58 to 58.10, to continue for a put to the downside. If I do not, if I am not an option trader, I would look to trade the leverage ETF. This is the inverse ETF. Again, similar type thing. We actually had an order for our premium members in on this today. I show a low of 26.43. It was not filled, and I know some of the members may have taken the option to do that plus or minus 10 or 20 cents, and they may have been filled on this particular trade. It's looking good, like it's going to go into more of a run up to the upside, but it's just basing right now. I don't get too excited, so that's it. XLE is a trade that we did get into. We actually got into the trade. It's showing similar type characteristics. Needs to break the 34 and then the 50, and then I would expect a rebound down here at about the About the 200-day moving average. With XLE, what we did wind up trading the ERY. Again, one of those leverage ETFs. This is an inverse. We picked it up here at about $30.90. We sold some at 35 for about a 15% gain. We're anticipating a move back up, break above the 20. We've got a good target up there towards the 38.90 level. If you were to look to get into this trade on this right now, I would look to get it in at somewhere about 34. I would basically put a stop down below the 32.86 level. Give it, make it 32.44. Give it a little bit of breather underneath that swing low there. And probably only do a half position. This is not a time of year to be jumping into full positions. Another, and this is the last one we'll cover today, XBI. XBI is the BioTech. Oh, this is really looking kind of interesting right now. So BioTechs came up. They have been on just a tear. Let me go over to the weekly chart and I will show you. They had gone almost exponential up to the upside. Now, if this was a Friday or if this was the end of the week, we would have a bearish engulfing on last week's candlestick. I would look for a potential downside opportunity about the 145.56 level. However, since it is not Friday or the last day of the week, I'll be looking to see what's happening here. We're getting a nice turnover. The 2 line on the market forecast looks like it, when these get these clusters, these 2-line clusters, oftentimes what they lead to is somewhere between 1 to 4 trading periods. In this case, it's a daily chart. 1 and 4 days after you get the cluster, anticipate some kind of a move back up to the upside. Looking at what we have going here, we're getting some nice downside penetration below the 20. If I get down into this level here, and then I would anticipate, if this is going to turn into a bearish trade on the BioTechs to the downside, I would expect a rally attempt, fail below the high, and when it rolled over right there, we want to be sitting there, standing by, ready to go with some kind of trade around that area right there, and that comes out to about the 142 level. Let's watch that. may also correspond to about the 8-day moving average when it gets down to that side. The other side of that, if you don't want to trade options on this, LABD is the leveraged inverse ETF on this. And as you can see from this low here, is what I like about it. And I'm going to be doing a whole presentation as we get into the new year on these leverage ETFs, because I mean, if you don't want to trade options, these are these are leveraged positions that have fewer variables than trading a straight option that you need to be aware of. So it's up about 20% from its low, and so. Okay, that's it for today, guys. We'll just wrap this up. We went 20 minutes, about 5 minutes longer than I wanted to, but a lot of stuff to cover. A lot of really good-looking opportunities with the leveraged ETFs and the directional ETFs if you want to do some downside option trades. So again, if you haven't, please leave me a comment. Tell me a stock you want me to review. I will see if it makes it on my radar, but those three ETFs are on the radar of the active trend traders. So again, share, like, and save. If you're on the YouTube channel, so hit the subscribe button and the bell to be notified when we upload new content. Until tomorrow, this is Dennis Wilburn, the active trend trader. Aloha, God bless.